we're in a time in history where I think that's like more important than ever right now.
Bitcoin, because there's only a certain number of Bitcoins that will ever exist.
Clearly emerging, it's in news headlines.
Or dollar. And so the buying power that you had in that dollar actually loses power over time.
We're touching on some important things here.
But everyone has lettuce fingers and panics out when prices are going down.
Welcome back to it. We are here for another episode, and y'all are going to have to be a little patient with me today. I'm just coming off a case of laryngitis, so my voice doesn't sound like it usually does, but it's coming back, and I'm recovering. And this is it. This is the Natural Man Podcast. I'm Mike C. And today we're going to take a bit of a different turn with this episode. We're going to be talking to a guy named Scott McGregor out of Alberta, Canada. Scott is sharp. He's a former award-winning broadcaster turned money guy, and he's had over 10 years of successful active investing experience. Since 2019, he's been mentoring retail and institutional traders at stockmarketmentor.com. His history in the media gives him an edge in being able to interpret a lot of financial information quickly and break it down into straightforward analysis. So he also hosts a podcast about cryptocurrency called Hot Wallet, and you can check that out at hotwallet.ca. Definitely something to give a listen to. And like I said, this episode's a little bit different because wellness goes just beyond mind and body. Wellness is a balance in every area of your life, and that includes financial wellness. How financially well are we? How balanced are we with our finances? Do we understand how to manage them properly? Because sadly, these days, a lot of people don't. It's important for us to have these things in order for us to thrive. And so when finances are in disarray, they can impact other areas of people's lives. And so this is why we've moved to broaden our content a little bit and include more wellness topics. And we felt that exploring financial wellness was an important area for us to discuss. And who better than the man, the guru, the finance guru, Scott McGregor. Scott, thanks for being here, man.
Mike, thanks so much, brother. It's an honor to be with you. You know, we were talking off air. I'm a bit of a fan of yours, so just grateful for the opportunity. I do want to make things clear, though. I'm not a guru by any means. I'm just a regular guy who found his way, kind of fell into the market, fell into Bitcoin and down the digital asset rabbit hole. And so, you know, I'm not special in any way. I've just done a bunch of research and been lucky to develop, you know, a teachable trading strategy that I help thousands of people use all over the world. And so just grateful for the opportunity to be here and hopefully open some minds today.
Well, that's awesome. For sure. For sure. And we're like I said, we're really glad that you're here. So talk about cryptocurrency, like define that for us. Some of our listeners, viewers may not be familiar with what this is. It's clearly emerging. It's in news headlines. Financial broadcasters and different news sources are all talking about it, whereas years ago they kind of ignored it. It was this thing off to the side, but people are paying attention to it now. So define that for us.
Yeah, so a cryptocurrency is essentially a network, whether it's a telecom network or any kind of network that you can think of, but it has a token on top of it. So you can actually value that network. If you look at Bitcoin, for example, there's two aspects to Bitcoin. We look at Bitcoin, the token, and then Bitcoin, the network. And so the Bitcoin token, the thing that's worth money, is just the value of one token on that network. And that network's value is based on people using the network, people transacting, and the amount of people that are doing it, and then the amount in terms of dollar value that they're transacting with. And that's how we value these networks, whether it's Bitcoin, Ethereum, Solana, or something else. So it's just, you know, simple thinking. It's a network with a token on top. And for the first time, we're able to value networks, where before we weren't really able to. You know, we had different types of networks, whether it was a highway network or a telecom network, or whatever it might be. And now we have the technology to actually value networks, and we can do that with a token on top.
Right. So that token is it's a store of value, right? Like it's worth something. So this network is like a monetary system within itself. So, we know that every Federal Reserve across the world, not every Federal Reserve, we have the Federal Reserve here in the US, but every central bank, I should say, across the world all manages like a native currency for that country, or they, in some cases they use like the US dollar or whatever, for example. But this monetary system, this network is actually like its own sort of bank. Does that sound right?
So, kind of. You look at the U.S. dollar as a network of influence. And that's how you can think of fiat currency. It's a network of influence. And the more influential that network is, like the United States dollar or like the euro or like the British pound, the more valuable that is, and the higher the value that is around the world. Where if you look at something like the Argentine peso or whatever, less valuable of a network, and so the value of that currency would go down. And so that's one way to think of Bitcoin. Some people think of it as a store of value because of some of the different attributes that it has, similar to gold and other commodities. You look at the scarcity of Bitcoin. I mean, by the way, Mike, we're really diving in the deep end right now. I hope that's okay.
For sure.
The reason Bitcoin has value is because of the amount of people that are using the network and the transactions, right? But there's also a scarcity asset attributed to Bitcoin because there's only a certain number of Bitcoins that will ever exist. Where if you look at the fiat currency network, central banks, as you mentioned, they can print new money anytime they want. And what that does is that actually debases the value of your dollar. And so the buying power that you had in that dollar actually loses power over time. And we really saw that coming out of the pandemic, where we saw central banks around the world, including here in Canada and in the United States, basically just pour money out of a helicopter and say, who needs cash? You need cash? Here you go. Money, money, money for everyone. Let's hope the world doesn't implode because of COVID-19. And what that did is that flooded the system with money. Couple that with the supply chain issues that we had, and then all of a sudden you have a battle for goods, because goods are suddenly becoming more scarce, whether it's food or in the pandemic, you may remember used cars in some instances being more valuable than new cars because of the scarcity, because they weren't making new cars anymore. They were making them not as fast as the market could want to buy them. And so that's one of the reasons that Bitcoin itself has value, is because people are buying it, looking at it as a potential gold 2.0, and there's only a certain number of Bitcoin that will ever exist, a certain number that get mined every single day and distributed into the network, and then that holds that value. And so that's kind of how that monetary system works with Bitcoin. And you can look at gold, very similar, where there's a scarce asset, gold. There's only so much gold that exists right now. But the difference is when the price of gold goes up, gold miners then want to produce more and more and more and flood the market. And so that's one of the things that's kept gold at kind of a flat level for the last couple of years. If you look at the chart of gold, it went up and then it went sideways, and it's been going sideways for, a long, long time now. And again, that's because the market gets flooded as soon as prices go up, where with Bitcoin, there's only a certain number. You can't print any more Bitcoin because it's programmatic money.
So this is something people, I think, need to pay attention to, because you mentioned the inflation, and, I don't want this to turn into like a deep conversation on economics and go over too many people's heads. But, we're touching on some important things here, and that is that if you're dealing with this inflation, a lot of people are having a hard time financially at the time of us recording this podcast. It's tough out there. There's a lot of like groceries are still fairly expensive. Gas here in the U.S. has come down quite a bit since, the peak of, this inflation cycle we were in before. cost per gallon. But I think it's important for people to try to research some of this stuff. And, we're just looking at one aspect of finances, and that's, Bitcoin, cryptocurrency, virtual currency, whatever you want to call it. Because people need to pay attention to this stuff so they can find ways to build their own wealth. And this is a way to be, diversifying where you invest your money. Everybody who invests any kind of money needs to be concerned with where they're investing it. You're trying to save for retirement. You're trying to save for your kids' college fund, whatever it is. And, we're in a time in history where I think that's like more important than ever right now. I mean, there was a time maybe like 6 months to a year ago where down here, eggs were $10 a carton. You know what I mean? Like, that's insane.
Yeah.
And just think of that. And like, it's not like we can just stop eating. And so, again, that's one of the reasons we're diving into this topic, which is very different for this podcast, but I think it's important. And that is just managing finances. So, exploring something like Bitcoin is a way of diversifying where you invest your money, because it's actually a form of money that you can transact with, right?
Definitely. And, you really touch on an interesting point, and that's the idea of buying power. And so fiat currencies and currencies generally
and Scott,
have been debased.
I know what you're saying, but can you just define fiat currency just for any of our viewers and listeners?
That would be like paper money, right, for example. Paper dollars that you get from your employer that you then put in a bank and the bank holds right for you. That's what I would classify as fiat currency. But currency generally has been debased since the dawn of time. Even when there were gold coins that people were using, or silver coins, or shackles, or whatever, you would have the king or whoever was in charge clip those coins and essentially take the value of that so that they could have more for themselves and print more coins, as there was only a certain number of those coins available. They would clip the coins. Yeah. And so all of a sudden your whole gold coin is now clipped out. And so that's essentially what has been happening with fiat currency, with normal dollars that you and I transact with. And I before the interview, I was actually remembering an episode of the movie or the show The Crown. Have you seen that one?
It's about the show, but I've never seen it.
Okay, it's pretty interesting. It's just about the royal family essentially, and in Britain, long time ago, there was a prime minister that came in to talk to the Queen about the economy, and one question she asks, and I think this is in like the 60s, something like that, is, are you going to debase? I mean, are you going to print more money to stimulate the economy and keep things going, keep the party going? And so fiat currency debasement is something that isn't new, but it definitely became something that a lot more people paid attention to because of the pandemic. So just want to make that clear. It's not based on a political party. It's not because of Joe Biden. It's not because of Donald Trump. This is just about how the fiat currency and central bank system is set up. It's always been set up for debasement. And so what people, to your point, what people should look for is something that will help them maintain their buying power with their dollar. For some people, it's not Bitcoin. For some people, it's putting their money in the S&P 500 or in Facebook stock or, whatever it might be. But increasingly what we're seeing is people look at Bitcoin as a digital version of gold, something that ideally will hold its value. That doesn't mean that the price won't fluctuate, but it will ideally hold its value because the more people that get involved with the network, the higher the price potential can be. And so that's one of the reasons people look at Bitcoin specifically, because of its programmatic nature and the fact that it has, over time, increasingly gone up and held its value. Anyone who has held Bitcoin for 4 years or longer has not lost money. Doesn't mean that will change or won't change, but that's historically what has happened. And same thing, you could say the same thing for gold, for example, where over time, historically, you've been able to hold some of your value. The difference is with Bitcoin is because of its scarcity, it has the potential to go up in price. And so not only can you hold that value that you're saving, if people are using it as a savings account or whatever, then, it's increasing in value. Some people did that with Tesla stock. They were early investors in Tesla, and Tesla was their store of value. So whatever your vehicle, just ideally, you want something that holds that value of your dollar so you can circumvent any central bank intervention, any sort of stimulus that the government may put out or any sort of printing that a central bank may do. You just want to be able to hold that value and ideally, in a perfect world, have more money later than you do right now. And so that's one of the ways that I think you're getting across to people is you just want to find out what that is. For some people, it's Bitcoin. For some people, it's not.
And it's never cash. So it's never just take your paycheck, stack them up, leave them in a separate savings account, and just save. Because as
well, why would you? Because the interest rates that you're getting back from the bank are nothing. When the Federal Reserve has a 5% interest rate and your checking account has a 0.01% interest rate, you're legitimately losing money every day by keeping it in cash.
And then that's what's important, and that's again going back to balance and financial wellness. That's where the research comes in, and we have to determine what we're comfortable doing with our money, because we know that just leaving it in the bank is never a good idea if you're using it. If you're not using it you tell me, I would say if you're not using it in the next 6 months, get it out of the bank and put it somewhere and try and get some growth out of it. Am I right?
You definitely want to know what your time frame is. For everybody, it's different. If I'm saving for retirement, I don't care if it goes up or down within the next year. I'm probably not going to need it for another 15, 20 years. And so in that case, you want to ideally put yourself into a vehicle that has a history of going up over time and ideally can, again, go up higher than the rate of inflation and higher than the rate of deflation, debasement when it comes to fiat currency. So, that's exactly what you want to do. You want to find something. For some people, like I mentioned, it's Bitcoin because it has that history of going up over time, and its scarcity scarcity attributes are very attractive to some people. Like I said, that's really kind of what people want to look for.
And so Bitcoin, circling back to that, because that's where we sort of initially started our conversation, but it seems kind of complicated at first glance. A lot of people look at it and they're just puzzled as to how to buy it. They might see Bitcoin ATMs around town. There's some around the city I live. But what are some ways people can buy their own Bitcoin?
Well, first off, I recommend people doing their own research about Bitcoin. Really decide if that is something you want to hold and ideally hold for the long term. And I never recommend anyone, just go out and buy Bitcoin because you or I are saying anything about it. I find you need conviction in anything that you're doing with your investments. And, it's recommended, obviously, to talk to a certified financial advisor. So I want to get that out there just in front to protect both of us because, we can't predict the future. We don't know what's going to happen with price. And so what I would recommend is, again, do that research, really understand what Bitcoin is, how it works, why it does what it does, and why people consider it as a gold 2.0. First and foremost, I recommend doing at least 100 hours of research. Look at videos on YouTube, listen to people like Michael Saylor, listen to people like Raoul Pal who, talk about digital networks and talk about scarcity assets and really, find yourself convicted in this idea firstly. Because if you just chase it now because number go up and price go up, then you are going to be easily shaken out when eventually number go down and price go down. And so you don't want to chase something just because the price is going up. You want that conviction in your idea.
No, thank you.
And again, whether that's you're buying a stock.
No, thank you for clarifying that. I'm glad you mentioned that. Yeah.
Yeah, definitely. Because again, I want people to make money, but I also don't want them to be panicked out because this can be a bit of a volatile asset, and no one complains when the volatility is going up, but everyone has lettuce fingers and panics out when prices are going down. And so, what I like to do is again have that long-term time horizon, decide where that time horizon is, as I mentioned. Historically, over time, you have to hold Bitcoin for at least 4 years to not lose money. And that's if you're holding it and not trading it. And so I would definitely, focus on that time frame and then decide if that kind of hot sauce is something that you want as part of your portfolio. And then decide what percentage of your portfolio you want to attribute to Bitcoin. Now, there were just in January, the U.S. just launched some Bitcoin ETFs. And so you can actually get exposure to Bitcoin through a normal brokerage account like Charles Schwab or TD Ameritrade, whatever it might be. You can actually get access to Bitcoin through a normal brokerage for the first time in the United States, other than something like the Grayscale Bitcoin Trust, which has been around for a while but kind of traded over the counter. Not everyone can buy it. So now we have major institutions like BlackRock, Fidelity, ARK Invest, Franklin Templeton, you name it, VanEck. They are involved in Bitcoin right now, and they offer Bitcoin ETFs. All these ETFs have different fees, different advantages, different disadvantages, different liquidity, and so that's something people should look into. I usually recommend the top 3 in terms of trading volumes because typically the spreads on that, the ask and the bid, are a little tighter. So you want to look at something like BlackRock's iShares Bitcoin Trust, IBIT. You could also look at the Fidelity one, FBTC. You could look at something like Bitwise, BITB. And these are all stock tickers that you can buy in your normal everyday trading account, whether it's a Robinhood account or, as I mentioned, something like TD Ameritrade. You can also look at actually owning Bitcoin the asset. Now that's different because Bitcoin the asset is kind of like holding gold bars, right? You need to store it. It's self-custody, and ideally you don't want to be at risk of a third party holding it for you that could get, your password hacked or anything like that. And so I think of it like holding a gold bar if you're going to hold actual Bitcoin. What do you do with a gold bar, Mike? You put it in a safe. And so that's what you want to do if you are deciding that I want to hold Bitcoin, the asset, instead of just holding Bitcoin via an ETF or something like that. And so in that case, you'd want to look at something like the Coinbase wallet to store your Bitcoin in a hot wallet, something like that, or something like a Ledger or a Trezor wallet. And then again, doing that education for yourself to say, okay, I've decided to take that risk and buy Bitcoin. Now, how do I manage it exactly? How can I send it from one wallet to another? How can I send it back to the exchange if I decide I want to sell? And so really kind of research that and practice with yourself to before you decide to go down that rabbit hole. People can do it with a small amount of money.
Yeah.
You could do it with $20. You could say, okay, let's say I have $10,000 I want to put into the Bitcoin network. Okay, let's try with 20. I'm going to buy $20 on Coinbase. Then I'm going to send that to my Coinbase wallet for safekeeping. Make sure it's a strong password and I have my seed phrase all saved in a fireproof safe or something like that. And then maybe I'll send it back just to see if I can do that properly. And so that's one way that I would, recommend people try to get involved just in a small dollar amount for those who can risk $20. You could also look at something like Robinhood, which is really easy. Robinhood got a ton of flack with the GameStop mess where they kind of essentially shut down the ability for people to buy the stock. But they are trying to make amends and really kind of do better with crypto. And so Robinhood is a good way to look. You could look at an exchange like Kraken. Gemini was started by the Winklevoss twins, the same two who started Facebook essentially before Zuckerberg stole that idea. And so there are tons of different exchanges that you can kind of try out. And I definitely recommend trying them all out because you can have multiple apps, multiple wallets on your phone. and it doesn't cost anything. It's usually free. They're going to make you jump through some hoops. They're going to make you send them your ID. They want to know your tax information because you got to pay taxes with crypto and all that stuff. And so there are some hoops, but that way you can figure out what works best for you. And the best thing about crypto, Mike, is that you can move it. And so if I decide, what, I actually don't like Coinbase anymore, I prefer Gemini, I can take my assets and I can send them over there. And so that's one of the advantages that you have with Bitcoin and cryptocurrency that you don't have in a normal stock brokerage account. No, sorry for the long answer, by the way. I kind of went down a few rabbit holes there. But, if you get me started on this stuff, I can't stop talking about it.
That's why you have a podcast on it. I mean, this is what you do, and that's why we wanted to have you on. No, thank you for covering all that. All very useful information. And obviously, once you assess the personal risks associated with investing in an asset like that or putting your money into something like that, it's obviously smart to start small, right? You don't want to put your whole retirement account in there. That would probably be a bad idea.
If you were to do that, it would show how little you value your money. And there's a great rule we have in trading. No one cares more about your money than you. And so if you want to take care of that money, then you're going to figure out how to do it the right way. And, the right way for me may be different than the right way for anyone listening right now, and might be different than the right way for you. And so, it really is, investing is a real personal thing. And even if I'm teaching someone how I trade exactly, it may not click with them exactly. And so, I always say, I'm going to give you the best information that I have, but you make it yours and you own this idea. And then people, take personal ownership for it, which I think is just super powerful. I came from a broadcast industry background. I know that's where you came from as well, not having money ever, living in my overdraft every month for 20 years, something like that. And so it wasn't until I started actually making money consistently in the market that I started to really understand some of the things that I'm trying to teach people now in terms of care about your dollars and taking personal ownership and owning your ideas, because everyone wants an easy answer. Everyone wants someone just to tell them what to do. But that person who is telling someone else what to do exactly is not going to be there when things go wrong. They're going to be, they're going to have already sold or whatever. And so, taking that personal ownership and saying, okay, I like the idea that Scott and Mike are talking about, but I need to make it my own, I think, again, is just super powerful. And to your early point as well, part of that holistic personal freedom, whether it's personal health, relationships, and then financial freedom as well. So I think it's just part of that spectrum.
Yeah, definitely. And, that's why it's so great to be able to share this information and hopefully just open people's eyes to all the different options available. Because as you said, like, investing is so personal. I would say that managing your money is so personal that there's almost no right or wrong answers. It has to be right for you. And so if something like Bitcoin is too risky of an asset to, invest in or to buy, then there's other things people can look at and buy. And maybe we'll do a future episode on that because, I know you're well versed in all the different places people can, invest their net worth to try to grow it. And, that's the goal for everybody, right? Nobody's working to be broke. Everybody's working to try to make money and thrive. And when your finances are not in order, your life can be a mess. Like, that's, I read one statistic long time ago that that's one of the number one reasons for divorce. You know what I mean? Just that, when people don't have finances together, it just stresses out the dynamics of relationships and it makes life so difficult. So we can't always avoid financial issues. Sometimes they just come our way, whether we get hit with a lot of expenses or somebody loses a job or whatever it is. But the more you can prepare and plan for this stuff, I think the better the quality of your life can be. Does that make sense?
And the sooner you do it, the better. I wish I knew what I know now, 20 years ago, because, I'd be on an island somewhere or something like that. And so, the best time to start is right now. Whether doesn't matter what the market conditions are. The best time to start caring about your financial future is now, and really focus on your goals and what you're trying to accomplish. Am I looking for daily income? Okay, if I'm looking for daily income, then I care about short-term time frames, and I want to think about day trading. Do I care about monthly income? Okay, in that case, maybe I want to do swing trading. Or do I care about retirement? All right, well then I'm doing long-term investing, and then again, having that time frame laid out is really just going to clear a lot of that noise out of your system, because as soon as you get involved in something, whether it's Bitcoin or anything, you're going to have some people saying, no, I think it's going down. Well, no, I think it's going up. Well, one guy may think it's going down today, but another guy may think it's going up over the next 2 to 3 years. And so again, knowing that time frame for yourself and what your goal for investing is, I think is first and foremost the most important thing that you got to figure out.
Yeah, definitely. And to a point that you made earlier, you said someone should do 100 hours before they even consider Bitcoin. I think it's probably wise for people to put in those hours in anything where they're going to put their money. Maybe not necessarily 100, but do your research before you put your money in anything, whether it's a stock or an ETF, an exchange traded fund, whatever it is. Do your homework, right? Don't just invest blindly or listen to what your neighbor might have suggested. It has to work for you.
Absolutely. And then what I also recommend is buying over time. So Bitcoin, as you know, price goes up, price goes down. I think Bitcoin was down $1,000 US the other day. Today, it's down $350. I was just looking as you're talking there. And so what you want to do is really kind of spread that out over time. So if I have $10,000, for example, to spend, probably going to be a little risky for me to plop that 10 grand in all at once. Because the second you buy, it might go down, and then you might panic yourself out and get kind of scared. And so what I recommend to people, especially with Bitcoin or some sort of long duration asset, is to just make spot buys over time. So again, $10,000 as a reasonable number. Maybe I want to buy $1,000 worth of something every single day for the next 10 days. That'll smooth out your price. And then again, just kind of make it less risky for you generally, because I was talking to a lady the other day about investing, and it was our cleaning lady actually. And she was talking about how she doesn't really do it that much, and we're just making conversation. And I said, "Oh well, I can give you some guidelines. I can give you some basic rules and some exchanges to get you going." And she's like, "Yeah, I tried it one time, but I bought, and then I immediately lost money, so I sold right away." And that's a lot of people's experience. And again, it's that time frame. When do you expect to make that money? Did you expect to make money the second you bought? The market doesn't care that much about you or me or anyone. The second you buy, the market's not going to go, "Oh, good, Mike's in. We can finally go up now."
Yeah.
Or, "Oh, good, Scott bought more. Time to moon."
Yeah.
You know what I mean? Like, the market doesn't care about any of us. And so if you spread your buys out over time, kind of smooths out your price. And then if it goes down tomorrow, you're, "Oh, good, it's going down. I can buy more with my $1,000. And so that's what I would recommend for people to get involved is, again, do that research. I say 100 hours just because for some people it takes that long. For other people, they're quicker students. They can watch a 3-hour podcast and say, "Nope, this makes sense to me and I'm fine with the volatility." And then they're good to go. So I think 100 hours is a good place to start. You can go to a website like hope.com, which is run by Michael Saylor, and there's tons of research on Bitcoin there, which is a great resource for anyone who wants to just kind of learn about what exactly it is you're buying. Because Mike, when I got involved initially, I didn't know what the heck I was doing. Like, I had no idea. My brother-in-law initially told me about Bitcoin a few years ago, and then I put some money in, and I was like, okay, I'm buying a bunch of numbers, but what exactly is this thing? You know what I mean? And so that's the fear that a lot of people can have, and especially if you're putting a good amount of money in, the second it goes down, you start to lose that conviction. And so you really want that conviction initially, especially with something like Bitcoin that can chop around, based on macroeconomic headwinds or, whatever the Federal Reserve in the U.S. decides to do with interest rates.
Yeah, it's funny. I have a friend who used to mine Bitcoin years ago, and he just described this moment where he first set it up and he was watching and we can get into that after, because Bitcoin is something that's mined like on a server, as we both know. But he was watching, the number go up, what he was mining, and he was like watching it, and he's like, "Is this real?" You know what I mean? Like, is this actually money that like value I'm accumulating just watching these numbers go up? I just thought it was a funny story. It just remind me of that when you mentioned mining. And so I know we're jumping all over the place here just with finances and Bitcoin, and we can go wherever the conversation goes. But so Bitcoin, there's only a fixed supply of Bitcoin. It's not something that's going to be issued forever and ever and ever, like government issued money, which we all, work and use to eat every day. But there's still some that has to be mined. Can you elaborate on that a little bit?
Yeah, so basically, just a surface level understanding of how Bitcoin is mined is, again, Bitcoin is a network. And computers are attached to this network, and what they do is they solve complex math problems using high-quality graphics cards and ASIC miners, specific miners made just for this kind of computation. And they solve these math problems. And it's a process called proof of work. And the idea is you solve this math problem, you have a bunch of computers solving them, and your reward for doing this and securing the Bitcoin network is that you get rewarded with Bitcoins. And so that's essentially just, again, surface level understanding of how Bitcoin is mined and where it comes from. And it's actually, Mike, I don't know if you know this, it's not the first digital currency that ever existed.
Is that true? I thought
there were some other attempts at digital currencies started well before Bitcoin. But what Bitcoin did is it solved a bunch of problems. It solves centralization, number one. You think of the Federal Reserve or any central bank, it's a centralized system. The money comes from here, and it's people that are in charge. And what Bitcoin did is they spread that out across the network. And so that means there's no single point of failure. If one cluster of Bitcoin miners go offline, like we saw happen with China when China banned Bitcoin mining, well, those miners then move elsewhere. They move to a jurisdiction where they can actually mine and secure the Bitcoin network. And so that's one of the things that Bitcoin solved, is it solved the centralization issue of a single authority in charge of this money. And the problem with digital currencies, as you know, or before blockchain technology, was a double spend problem. And so essentially you could just type, "I'm creating more digital dollars now," just like the Federal Reserve can do.
That's a government
and
trick.
That's not what, yeah, exactly. And that's not what Satoshi Nakamoto wanted. Bitcoin came out of the 2008 financial crisis, where the bankers in the U.S. essentially crashed the world economy, and taxpayers bailed them out, and no one went to jail. And then all of a sudden, here we go with, again, hundreds of billions of dollars of currency debasement. And so that's where, Bitcoin's proof of work system came out of, because they wanted a system that couldn't be manipulated by a third party.
Right.
And that's one of the major benefits of Bitcoin. I can send money to you without a third party being involved. It's the software that works and the miners that process that transaction, and you get the money, and there's no third party going, yes or no, I will allow this to happen. And so those, but you can look it up. There were some other attempts at digital currencies, but they all kind of imploded. And again, a lot of it had to do with the fact that there were people involved. Well, who's going to be in charge of the money? The U.S. government isn't going to just give that up to some Joe Blow software company. And so what Satoshi Nakamoto did was essentially gift Bitcoin to the world and say, look, I'm not in charge of Bitcoin. You're not in charge of Bitcoin. We're all in charge of Bitcoin. The network is in charge. And so that's, again, just a huge benefit of Bitcoin and that digital network idea through blockchain technology, where they're mining these coins, and it's being rewarded to people who are doing the work of processing transactions and securing the Bitcoin network.
No, that's a great point you hit on, Scott, because the decentralization aspect, it introduces a certain level of freedom with that financial avenue, in that there's no entity that can come in and create rules. You know what I mean? It's something that's set in stone, and it's the way it works, and everybody who's a part of that network understands how it works typically. And so, I can go send you Bitcoin at 2 a.m. on a Sunday night. Good luck doing that with a wire transfer through a bank, right? I mean, there's a certain,
Yeah, for much lower fees as well.
yeah, for sure. So that's interesting. And again, just to reiterate a point, this is something that I think is of great value for people to understand, because we talk about currency debasement. Everybody listening to my voice right now works hard for their money, or they work for their money, right? Everybody listening to my voice either works or lives off some kind of money, and you want that money to last, right? You want that money to be as handled as optimally as it can. And so with all this stuff affecting, potential net worth, with the cost of everything going up, with inflation and all those things, you really want to seek as many avenues as you can to be able to stabilize your financial situation as much as possible, right?
Yeah, absolutely. And again, for some people, that's Bitcoin. For a lot of us, that's Bitcoin, because historically it has gone up a lot over time, especially after the halving. Bitcoin's best performance usually happens after each halving. 12 to 18 months after the halving is usually when you get some of the big outperformance of Bitcoin.
Can you explain the halving?
And for me, sure. So as part of the programmatic aspect of Bitcoin and the scarcity asset of Bitcoin, I guess we should first talk on the supply of Bitcoin. So you kind of touched on it a little bit. There will only ever be 21 million Bitcoin that will ever exist. That's in the code, and it can't be changed. And so what happens through the mining is a certain number of Bitcoin gets released every day. Right now, I think it's about 900 per day that gets mined through the miners and either released into the market or held by miners as some sort of asset or whatever. They do whatever they want with it. Some people save it, some people spend it, some people sell it. And so that's how we get Bitcoin coming out into the market every single day. Now that has been programmed into the code, so it will go as long as, I think, 2145 before the last actual Bitcoin will be mined. And so as it stands right now, every 4 years, there is a halving cycle. And that means that the amount of Bitcoin that gets released to the market is cut by half. And historically, what happens is prices go up because it becomes more scarce of an asset because of that. And so as it stands right now, I think there's around 19 million Bitcoin that have been mined. About 4 million of those, Mike, have been lost, which means there's actually way less than 19 million that are circulating. And so again, that's where you think about it. And if the Bitcoin network continues to grow, people continue to trust the Bitcoin network, they continue to invest in the Bitcoin network, then the price mathematically has to go up, because there's only a certain number that can ever exist. Everyone in Canada cannot own one single Bitcoin. Everyone in the United States can't own one single Bitcoin. But what's great about Bitcoin is it's fractionalized. And so there's 100 million Satoshis for every one single Bitcoin. And so even if you can't afford a whole Bitcoin, you can still utilize and participate in the growth of that Bitcoin network. And so every day, like we said, Bitcoin are mined. They're either sold into the market or sold to someone else, or sold to some of these new ETFs that have come to market in January. And then that's how Bitcoin kind of comes to the market, but it's programmed. So every 4 years, the supply and the amount that gets released every year or every 4 years gets cut in half.
You mentioned something just now, and you talked about how 4 million Bitcoin were lost. And can you elaborate on that? Like, there's no there's no third party to go to. Once, if you lose those, they're gone. You can't complain. You can't call an 800 number and figure out what happened, right?
Definitely. And that's one of the risks of interacting with decentralized software is you're not talking to a bank. There's no 1-800 number to call. Mike, if you send me some Bitcoin and put in the address accidentally, nothing we can do. That money is technically gone. And so over the years and every day, people send Bitcoin accidentally to wrong addresses, and it adds up over time. There's also been a significant amount of people who were early in Bitcoin, put Bitcoin on a hard drive in their computer, and then accidentally threw it out, and it's in a landfill somewhere, probably never to be found. Some people have, a ledger wallet on a USB and go boating, and then all of a sudden that falls into the ocean. And so just over time, humans are clumsy and can lose things. And when you have a scarce asset like Bitcoin, where there's only a certain number, sometimes people lose those and they're gone forever. Doesn't mean that they will always be gone forever. I think that guy in the UK is still digging through the landfill, trying to find his hard drive that had a bunch of Bitcoin on it. But that's usually what happens. It's human error where someone will be either sending Bitcoin somewhere by accident to the wrong address, or they put it on something and it gets lost.
Double check those numbers, kids.
That's right. Yeah. And a lot of software like Coinbase and whatever, they will, if you are copying and pasting a Bitcoin address, you can usually do it on your phone, copy paste right away. That's how I like to do it if I'm sending Bitcoin anywhere. And then that way I know exactly that it's going to the right address because I copied and pasted it. I'm not typing it in. So that's usually best practice if anyone is moving money around. But yeah, people are clumsy and accidents happen. But that ultimately is in the benefit of holders of Bitcoin because the less there is out there, the more scarce it becomes.
And then hence the more its value typically increases. You talked about exchanges earlier, places where people can sign up, and if they want to own this, own Bitcoin directly and not through like a third party, through a fund, on a investment portal of some kind. So there's been issues in recent years with some of those exchanges. Some of you might remember the FTX scandal, and if not, you can Google it. But these exchanges just went belly up because of, mismanagement of funds, a lot of legal issues surrounding that, bankruptcies and things like that. So, Scott, how do you recommend people assess an exchange that's viable, that they can trust, that, hopefully will not go bankrupt? Is there a way people can navigate where they should go?
Well, I think number one is you don't want to trust anyone. Even the most well-known exchanges. You only want to trust them at arm's reach, where you are going to the exchange to do your business, and then ideally you're taking that Bitcoin or taking those tokens off of the exchange and putting it into a wallet. And so typically you only want to trust when you have to, not because you need to. A lot of the exchanges now, like Kraken, Coinbase, Gemini, they will publish their holdings and say, don't worry, guys, we're not lending out your Bitcoin. And that's kind of what ended up happening with FTX and whatnot, where they would lend these tokens out to someone else. They would go bankrupt. And then the person who lent those tokens in the first place would call and say, hey, can we have our money back? And they didn't have the money. And so they had to sell customer assets. And, the whole thing imploded with their FTT exchange token, where they essentially said, oh, yeah, all of our collateral is in this token that we invented and we can make more of whenever we feel like it. So that's really, how that happened. But it's not the first case of a third party getting in trouble. We talked about the 2008 financial crisis. You can go back through time and a lot of different funds and whatever. Bernie Madoff, big pyramid scheme. And so this is just, again, the problem with trusting a third party. And that's what Satoshi Nakamoto wanted to get away from when they invented Bitcoin. He said, I don't want to be the one that's in charge of Bitcoin. It's not, because then you're just trusting me. And what if something goes wrong? And so let's make it so there's no trust. And so that's, again, the benefit of Bitcoin is it's a trustless system. Mm-hmm. And the more people dig into this, the more they realize, oh, wait, I'm actually trusting my bank with all my money right now. And turns out the bank actually doesn't have that money because they've lent it out to Joe Blow
Right.
down the road who's mortgaging a house. And so, that's, again, your bank, it may look like you have money, but those are just technically numbers on a digital ledger. And that money may not be there. And so, we saw that happen late or early last year, where we saw Silicon Valley Bank and all of these other banks in the U.S. kind of go bust because they didn't have the money. And then there was a bit of a bank run as everyone was panicking out. And so that's one of the benefits of a trustless system and a closed, decentralized system like Bitcoin, where there is no, no head of Bitcoin that decides what happens with the network and can decide to make more whenever they feel like it.
It's the whole essence of that decentralization, right? There's no
Absolutely,
party
yeah.
head. There's a guy who pioneered it and invented it, and then he just kind of disappeared and nobody knows who he is, right? People have some suspicions, though.
That's right, yeah. Well, I mean, they know about people like Hal Finney, who was one of the early cypherpunks, and there is some sense of some of the early cryptographers that were doing some similar things, but we don't know for sure. There's a guy in the UK right now named Craig Wright, and he's trying to convince everyone that he is Satoshi Nakamoto, even though a lot of his documents look like he copied and pasted, and he I think he submitted one document where they looked at the metadata. And the document actually came from well after Bitcoin was already existed and stuff like that. So there are people trying to take credit for it. But I think Satoshi definitely gifted the world not only Bitcoin, but also just blockchain technology generally, which just makes closed systems and decentralized systems much more important. And again, out of 2008 financial crisis, we didn't know what everyone owned. Everyone was like, well, you owe me this. Well, I owe you that. And then this guy owes me that. And, no one could figure out what everyone owned. And that's what a digital ledger can point to and say, oh, well, so-and-so, they lent money to them on this date, and here's a record of that transaction.
It's fully transparent.
And so you can actually go through the Bitcoin network and see every single transaction that has ever happened because it's saved on the ledger.
Right. Yeah, that's valuable too. And so that transparency helps kind of keep the integrity and trust of that network. But Bitcoin is a network. All virtual currencies run on essentially a network. Now, Bitcoin specifically, do you think it could ever be hacked?
Well, it's been around for a long time and has not been hacked. It actually is one of the most secure networks in the world just because of the amount of money it would take to hack the system. And again, the more valuable it becomes, the harder it becomes to actually hack it. So I'm not a computer scientist by any means. I'm a speculator. I'm an investor. But my understanding is that it's near impossible to hack Bitcoin, and the more popular it becomes, the harder it becomes.
That's good.
People have talked about quantum computing. Oh, well, when quantum computing happens, Bitcoin's going to, okay, well, I don't know when that's happening. So until then, let me know, and then I'll move my money out. But for now, I think the Bitcoin network is pretty darn secure.
That's good. That's good. There's thousands and thousands of digital currencies that are out there today. Bitcoin is not just one of them, but why do you think it's still the most valuable? It's far more valuable than any other virtual currency. You can go look it up anywhere. Why is that?
Well, I think because people know what they're going to get. The Bitcoin network is what it is, and it's not trying to change what it is. And, like you said, it's one of many digital currencies. Mike, I actually think of them all as digital assets. I think that's a better way to think of it because not every single one of them is trying to be money. You look at Bitcoin, it's a monetary network. Bitcoin is trying to be money. El Salvador adopted Bitcoin as a digital currency that you can spend in their country. So Bitcoin, I think, is more like we talked about before, a digital gold, a digital type of money. You look at Ethereum. Ethereum is more about compute power. And so I think of it more as like, if Bitcoin is digital gold, then Ethereum is digital oil. And, Solana is something else. Solana is Google or Apple or something like that. And so, I just want to make that clear for people because you think of the thousands of digital currencies that are out there. Actually, I hate that term because, again, they're not all trying to be money. Some of them are. Litecoin certainly is trying to be money. I don't even know what that does.
Yeah.
I'm pretty sure it's just a copy of what Bitcoin is. Dogecoin probably trying to be money. I think Elon Musk is trying to use it as some sort of exchange of value. And so the reason I think Bitcoin is stuck around so long, just to get back to your question here, is because it's the first one. It's the big daddy, and it's the one that everyone can trust. And it's just chugging away and doing its thing. It hasn't been perfect. When it was in the early days, there were times where the network would go offline, but it's been online for so long and been trusted for so long because the software, the main code of the software hasn't changed, and you can just trust that the software is going to do it because you can actually, as we talked about before, look at every transaction. You can look at the blocks as they're being built, and it's so much more transparent than the current financial system where there's a ton more fraud and whatnot that happens with actual dollars than there is with cryptocurrency, despite what Elizabeth Warren will tell you. And so that's one of the reasons that I think it's the big daddy. It's the trusted one. As these Bitcoin ETFs really start to filter their way down into the financial system, we've seen billions and billions of dollars of inflows of money, passive money coming into these ETFs, adding to a little of that hot sauce aspect of people's portfolios. As people get a little more comfortable with that, it's my thought that they will then try and go down the risk curve a little bit and say, okay, what's this Ethereum thing about? What's this Solana thing about? And just kind of learn about it like that. So I think Bitcoin is a great place for people to start to get an idea of how a blockchain works, why proof of work is important for what Bitcoin is trying to accomplish, and then they can kind of go down that risk curve and say, okay, if Bitcoin is gold and Ethereum is oil, then what are these other things? And do they have a use case?
One thing we talked about in this conversation was the obvious volatility of Bitcoin. If you go look at a chart, you'll see it's a lot of zigzags over the last many years. Do you think there's a day that we'll see where that volatility kind of ceases?
I think we're starting to see that, actually, because we are getting so much of the money inflowing because of these ETFs. Bitcoin is it's down right now, but it's only down 0.5 percentage point. If I compare that to the S&P 500, well, the S&P 500 is up 1.78%. So the S&P 500 right now is currently more volatile than Bitcoin. And so when you think of volatility, you just got to think of it in relative terms compared to everything else. There are times when Bitcoin is volatile, but that's typically because it's further down the risk curve. And if you are in an uncertain environment, you think about having this is a bad example, but a room full of dogs. You got one dog that's just like chilling there on the couch, not doing anything. You got another dog that's looking out the window, and then you have a crazy dog that's like smashing the house and going nuts and whatever. Which dog are you going to kick out first? Probably the crazy one. Although I don't recommend kicking dogs. But you know what I mean? Like that's usually how people think about risk in their portfolio. Well, let's get rid of the most volatile one because these guys aren't doing anything. And so, and again, because of Bitcoin's scarcity, because there's only a certain number of Bitcoin available on the exchanges, it can move really quickly. So when you think of volatility, though, I think you got to look at the volatility to the upside and volatility to the downside. Bitcoin historically will spend more time going sideways or down than it will going up. And so Bitcoin will spend weeks and months, Mike, going down or sideways, and it'll spend days ripping faces to the upside. And so that's kind of the risk reward of like, okay, if I can sit through some of that sideways volatility or some of that downside volatility, then when it does go up, I'm going to be rewarded, and I'm going to be rewarded quicker. And that's one of the reasons that most of my portfolio is in digital assets.
Most of it. Wow.
Yeah, and because I got a long-term time horizon. I mean, number one, I'm sitting in front of the screens all day, right? Like I'm teaching traders all day. I'm fine with that risk because I'm right here and I can act if needed. That's not for everyone. But again, because I see that long-term view of like, okay, if I can sit through some of this sideways chop, then I'm going to get rewarded with that upside. Historically, at least that's what happened, or has been happening. And so as long as the thesis around Bitcoin doesn't change, as long as the macroeconomic headwinds stay the same in terms of the Federal Reserve more likely to cut rates than lower rates, then ideally you want to be exposed to the fastest horse. And for me, that makes sense to be cryptocurrency, Bitcoin, Solana, Ethereum, etc. For some people, that may be just buying a stock like Nvidia, which had their earnings yesterday and is now up almost $100 on the day. And it's a $700 stock, so that's a big move in terms of its market cap. It went up today, I believe, the full value of AMD, Advanced Micro Devices, just in the past 24 hours. And so again, there's volatility, but you don't hear people complain about that when it's going, when it's going up. It's just the downside volatility. So when you're looking at crypto and digital assets generally, just keep it all relative. I typically say you want to look, if you're looking at a chart, I got a bunch of charts here beside me, you want to look at a weekly chart, a long-term time frame, because a lot of times if you're looking at what price is doing on a 10-minute time frame, you're going to pull your hair out because it's going up, it's going down, it's going up, going down. And so you want to zoom out, have that long-term time frame, and then you can kind of stomach some of that volatility, understanding, okay, this asset spends most of its time going down and sideways, so I'm expecting down and sideways, and I will be surprised when I get that upside, but that upside should outperform near everything else. At least historically, that's what happened. So that's one way that I like to think of it when you're looking at Bitcoin and other digital assets as part of a portfolio.
That's a good way to look at it. Scott, how can people find you, man?
So I'm on Twitter, at Scott Trades on Twitter. I'm also at a website called stockmarketmentor.com. I work with a guy named Dan Fitzpatrick. He has been mentoring traders for over 20 years, and I'm honored to be, his sidekick or partner. And he and I will mentor traders from all over the world. We have thousands of subscribers at stockmarketmentor.com. And then just last year, I launched a crypto service called Crypto Market Mentor, where I talk about Bitcoin and other digital assets and look at them as investment vehicles. We don't do meme coins. Every token that we look at, it has a use case. There's real institutions behind it. They're real developers trying to do something. And so, we got a group of a couple hundred people that just look at digital assets. And so every week I will share video content with them of my view on the market, some interesting data that I've found, and whether or not I think it makes sense to be exposed to the market or, sitting in cash waiting for the dust to settle in terms of a volatile pullback or something like that. So Twitter is a great place, stockmarketmentor.com. And then you mentioned I have a podcast. It's called Hot Wallet. I honestly have been so busy with the market. We launched Crypto Market Mentor in September of 2023. And since then, Bitcoin went from 20,000 to 50,000. Solana went from 20 to 120. And you know what I mean? So I've been super busy. I haven't had any time to podcast lately, but if you want to see a great archive of cool interviews that I've done, hotwallet.ca is another place.
Well, Scott, this has been fun, man. Thanks for being here, and I'd love to have you back. We talk more about money and finance.
Mike, it's great to meet you. Great to meet your wife, by the way. What a great wife you have. So honored to be part of your podcast and just grateful for the opportunity. So thank you very much, my friend.
Appreciate
great to meet you.
And that'll do it for this edition. You guys subscribe and like this video as well. Subscribe to us on the audio side as well, if that's where you're listening. We want that engagement. That helps the algorithm, that helps us grow, and that helps us bring more content to you guys that you like. So we appreciate all of you, and you can always find us at naturalmanpodcast.com. And until next time, I'm Mike C. Stay healthy.
The Natural Man Podcast.